Hi everyone, welcome to the DWA All ETF Minute. My name is Siek and here with me today is Amy Kemp. Today's date is Tuesday, July 5th, 2011 and hope everyone had a great 4th of July weekend. We're happy to be back with you today. And second quarter is over and what we figured we take a look at what happened in the last quarter and look at some of the best and worst performing ETFs for the second quarter as well as year to date.
Yeah, year to date, because we are now halfway through 2011, which is very hard to believe, but
I know, time flies.
I know. So let's start with just the quarterly numbers.
Yeah, so if you look at the quarterly numbers, I was looking at the top 30 the 30 best performing ETFs, and interesting because when I look at the list, I see that most of those names are healthcare related ETFs, and so 15 out of the top 30 are healthcare related ETFs, and they they have gained anywhere from 6% to 10.5% just for the second quarter alone.
Yeah, and that's a trend that we've been seeing for the last couple of months. There's more defensive sectors like healthcare, utilities, even consumer non-cyclical. Those have been the ones that we've really seen outperform other areas of the market. And remember, using that All ETF X-ray button, you can search within those broad sectors for ETFs that have a high exposure to each of those groups. So, some on the list, though, like the best of the best in the quarter was the pharmaceuticals, right?
Exactly, yes. The IHE, the iShares Dow Jones US Pharmaceuticals ETF, was up 10.58% for the quarter. And if you look at just sector-based ETFs, 7 of the top 10 of those are healthcare-related ETFs. So healthcare has been the place to be for the second quarter.
And really year-to-date as well. There's quite a few. In my list, I've got the last 6-month numbers, and about half, if not more, of the top 10 best performing sector ETFs are also focused in healthcare in some way, shape, or form.
Right, And if you look on the flip side, the worst performing ETF for the second quarter was the BAL, ticker symbol is BAL. It's the iPath Cotton Index ETN, and it was down 28.75% for the second quarter. Another ETF that has been in the bottom of the heap in the past is the uranium, Global X uranium. It was down 18.9% for the quarter as well.
Yeah, and that one is actually the worst year to date. It's down 41% year to date, and a lot of the commodity related type of ETFs are in the bottom of the heap, as you say, for the last 6 months or for 2011 so far. A lot of miners, kind of the energy exploration in both clean energy, so nuclear and what am I thinking? Solar. Those are all down in the bottom of the heap in terms of sector ETFs.
Right.
But we wanted to also just kind of look at some of the other asset classes and look at the best and worst within those. If we look at the international ETF space, we had touched on this 3 months ago. It doesn't seem like that long ago, but we had just started to see the trend of the developed market ETFs outperforming the emerging markets, and that was really the first time we had seen that in quite a long time.
Right.
Nearly a decade. So that trend has continued on. Spain was the best performing ETF. It was the iShares MSCI Spain Index. The symbol for that is EWP, and it was up about 15%. And then the worst performing was Peru, which is going to be an emerging market ETF. The symbol on that one is EPU, and that was down about 25%. Also mixed in down at the bottom, as you would expect, Egypt is down there, and some China and emerging Asia Pacific names are down in the bottom as well. The other thing we wanted to look at was the fixed income space. So we have seen international fixed income ETFs really outperform any type of U.S. Treasury. When we look at the bottom 10 performing in the fixed income group, all of those are focused within U.S. Treasuries, mainly short-term Treasuries, and then the best performing is the Spiders Barclays Capital International Corporate Bond ETF. So it's both international and corporate based, which are two areas of strength within the fixed income market. The symbol on that one is IBND, and it's up 8%, 8.4%. So That's been a really good performing, and we've seen fixed income in general kind of pick up some speed as of late. Then the last asset class we wanted to look at were commodities, and the funny thing, when we were looking over our list and comparing, Sydney said the BAL, which is the iPath Cotton ETN, was the worst performing for the second quarter, but actually the best performing ETF or ETN in the commodity space for 2011 so far is the iPath Pure Beta Cotton ETN. And we've talked about the Pure Beta lineup a little bit in recent articles. But essentially, the Pure Beta lineup, what is it?
So really, the Pure Beta lineup is that it eliminates the or reduces the risk of backwardation and contango that any commodity traders are familiar with. That is that it basically rolls not necessarily to the next new month, right?
So it's using that kind of optimized yield roll to get the best possible return. So it's interesting to see that the BAL can perform so poorly just in the second quarter, but then year to date, cotton, the Pure Beta, CTNN is the symbol on that one, is up 22%. And then the worst performing is going to be again within the clean energy. So the global carbon ETN is among the worst. So is the Elements MLCX Grains Index Fund. The symbol on that one is GRU. Both of those down about 13 to 12%.
And again, that's year to date, right?
And that's year to date. Yes. Yeah. So so that kind of gives you a little bit of a roundup in the ETF space and what we've been seeing so far. Look forward to some features compiling, more information that we've seen over the last quarter. So we always use nsx.com to give us some inflow, outflow, and kind of assets under management updates for the quarter as well.